Federal Reserve is attempting to slow down inflation, and that's not surprising. That's their mandate. Inflation rose at 8.5% in March, the highest it's been in over 40 years. The question is, how are they trying to subdue inflation? By raising interest rates. They've already raised it by 25 basis points. They're expected to raise rates again by 50 basis points in each of the next two meetings. Alfonso Pecotillo, author of Macro Compass, said that the wealth effect still dominates the way the government engineers economic growth to make sure the balance sheets of consumers become stronger. As asset prices keep going up, consumers' liabilities, debt, and leverage gets cheaper. Imagine if equity or housing prices drops by 50%. It will be a destruction of wealth generated over the last two generations. And nobody wants that to happen. Pecotillo said the government is trying to engineer an economic slowdown. They're slowing down the demand side of the equation in the economy. They're making your balance sheet weaker, your 401k goes down, and your second home is going to be worthless. This way, demand slows down, therefore inflation slows down. The Fed will most likely continue to raise interest rates until something breaks. The Fed believes neutral rates are between 2 and 2.5% for inflation. They believe that if an economy can handle 2.5% and the labor market remains solid and the equity market remains buoyant, then they can just continue to raise interest rates. But that assumption is just irresponsible. While liabilities and debts could go even cheaper, everything else gets devalued. That includes our currency, savings, investments, retirement funds. The money we're saving and earning from working businesses and investments are losing their value while everything else gets more expensive. They're pulling all this down and no one seems to care. Pecotillo advises investors to be defensive in this macro environment we're facing. And Noble Gold Investments shares this opinion also. Investors should raise their hedge allocations, specifically gold and other precious metals. Could feel uncomfortable, especially with all the media hype against the inability of gold to climb above 2,000 again. But you have to be patient and realistic. Every other asset out there is tanking. The market just experienced its worst months in many years. Tech stocks are sinking big time. The crypto market has been unable to recover in the past 6 months. And cash is getting devalued daily. Real estate is threatening to burst. Gold is the only option. If you decide that having physical possession of your gold is better, owning actual gold in your IRA is better, Noble Gold Investments can help you. We offer concierge services for your precious metals investments. It'll take you no more than 5 minutes to open the account. After that, Noble Gold will do most of the heavy lifting for you. All you need to do is wait for our emails and our calls. So call us, 877-646-5347. Talk to one of our specialists. No pressure. We're just here to answer questions, or go to noblegoldinvestments.com. If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.